If we're headed for a seventh straight week of losses for Asia, this has only happened, this will be the fourth time in a century that we've seen that losing streak. Where do you see, aside from Hong Kong, some opportunities for bargain hunting now?
Singapore. Singapore is not an expensive market. You've got OCBC, for example, on about 1.2 times book with good exposure across Southeast Asia and a nice dividend yield. Our REITs also have yields, depending on your risk appetite, of anywhere from 3 to 10%. And we have a strong currency.
Tell me about your call on Hong Kong, because, of course, we are still hearing calls for more loosening of restrictions. Do we get in now because it is inevitable that they will fully open up? And do you also see any kind of opportunity for, I guess, a bet against what's going on in the rest of the world, with China hoping that we might have that counter-cyclical economic trend come in place maybe after the Party Congress?
Well, I view Hong Kong a little bit as a warrant on that. In other words, if somehow things get better in China, Hong Kong would go up. But I'm not holding my breath. I like Hong Kong because of its cheapness, first and foremost, and it's on 0.8 times price book. And the Hang Seng Index is a series that you can take back to the 1960s. Even then, it was never this cheap. And so where does it deserve to be 1.2? I doubt it, but maybe 1. I think that's actually fairer. What I like in Hong Kong is not so much the Chinese stocks. I like Hong Kong stocks, or companies that have a lot of business around the world, like if I said an HSBC or an AIA or a Samsonite. And if you couple that with the Hong Kong companies, which are things like REITs or utilities that have yields of about 5-6%. And by the way, the Hong Kong dollar, as you well know, is pegged to the US dollar, so you're not going to be exposed to the currency weakness of emerging markets. I just think it's a sound idea for that income in a hard currency.
Yeah, Mark, as you mentioned, if you take a look at this chart on the Bloomberg showing how the Hang Seng Index has fallen to that 18,000 level, really not a level seen since 2011, more than 11 years or so. I wonder if you're seeing such opportunities and good value in A shares, in Chinese stocks in the mainland as well.
Well, if memory serves me right, there's 7,000 A shares, so there must be a lot of value there. The problem is that it's not a well-researched market, and the big stocks are expensive. I think it's safe to say they still are expensive. I think in China, I would be less interested in value and more interested in growth. And the one area of growth that I do see is electric vehicles and renewable energy, where it's clear they are the leader in the world in that, and I believe will continue to be so. So in China, I'd be focusing more on that side.
Mark, we continue to see the strength of the dollar unrelentless. Where are you seeing the most vulnerabilities across Asia?
Well, it seems to be everywhere, doesn't it? It seems to be countries that are exporters and yet are very reliant on energy imports. So if I said a Korea, for example, where I think 94% of the energy that they consume is imported, and they export a lot of electronics, which are soft right now because central banks are raising interest rates and the world economy is slowing down. So I think those are the places which are weak and probably will continue to be until we get a move from the Bank of Japan. I think the Bank of Japan is really the linchpin in this whole situation in Asia. And when the Bank of Japan makes a material change in their policy, then I think the other currencies will also bottom and rebound. But it won't be probably until Croda leaves in April next year.
Mark, we are now at month 7 of the war in Ukraine, and there's lots of developments, not least of which, of course, is how frequently the nuclear threat is coming up for Vladimir Putin, as well as the annexations and the mobilization and all these reports of potentially closing borders as well. How do you characterize geopolitical risk if there is no end in sight for this conflict?
I don't know how to answer the question because in my career, which is 30 years, I never had to deal with it before. And I must admit, I wasn't trained in school to analyze it. So this thing caught us by surprise, and I still struggle to understand how to imbue it in markets. We can look back in history and see, I know it sounds quite morbid and sinister to say, but I'll say it anyway, that wars don't have a history of disrupting markets. World War II, Vietnam, Korea, Afghanistan, Iraq. But of course, if you're talking about something perhaps even bigger, well, not bigger than World War II, but bigger than the other ones that I mentioned, then I don't know. Really, I better stop rambling and just say I don't know.